Good morning, everyone, and welcome back to Crypto After Dark with Raw Zone Crypto. This is PA. Today, we're going to be going over a story that came out about a week ago on The Guardian. The Guardian's reporting that the the Bank of England is warning that Bitcoin could trigger a financial meltdown. Now, this was reported on October 13th, but it seems like all the news outlets are following up with the story. They're stating that cryptocurrencies could bring a financial crash the likes of 2008. Now, what I see happening with these articles and these so-called warnings is that they're trying to pin the upcoming financial crash on the cryptocurrency. I call it the cryptocurrency Wall Street, the cryptocurrency markets. We were supposed to have a financial crash back in 2019, and then we had this mysterious event of 2020, the pandemic, and so that was delayed. And now I think after the transfer of wealth that took place in 2020, 2019, 2020, 2021, now they're trying, because now we're at the end of the road of the quantitative easing that we've been on since the Obama administration. Now we're at the end of the road of the fleecing of America and all major nations. So I think they're trying to pin this coming crash on cryptocurrencies. So what are they saying? The headline is from The Guardian: Bitcoin could trigger financial meltdown, warns Bank of England deputy. Sir John Cunliffe likens danger to 2008 crash and calls for tough regulations of cryptocurrencies. So what they really want to do is trying to get cryptocurrencies and Bitcoin. Their main concern is Bitcoin. They're trying to get Bitcoin and cryptocurrencies under their control, under the central banking control. That's what it seems like to me. So the article states, a senior Bank of England policymaker has warned that digital currencies such as Bitcoin could trigger a financial meltdown unless governments, and this is the key, unless governments step forward with tough regulations. Likening the growth of cryptocurrencies to spiraling value of the U.S. subprime mortgages before the 2008 financial crash, the Deputy Governor, Sir John Cunliffe, said there was a danger financial markets could be rocked in a few years by an event of similar magnitude. Bitcoin and its nearest rival, Ethereum, tumbled in value earlier this year, but have recovered ground to reach towards all-time highs. Only 5 years ago, a single Bitcoin was worth about $700 compared to $56,000 today. Ethereum has almost doubled in value since July to $3,500. Cunliffe has played a central role in monitoring cryptocurrencies over recent years as an advisor to the G20's Financial Stability Board and the central bank's overarching advisory board, the Geneva-based Bank of International Settlements. Exactly. A highly respected former Whitehall Mandarin, Mandarin with contacts in political and central bank circles. His warning is likely to grab the attention of senior Treasury officials in the UK, Washington, and Tokyo. Cryptocurrency coins have grown in value by about 200% this year, from just under 800 billion to 2.3 trillion, and have risen from 16 billion 5 years ago. Cunliffe said that while the finance industry was more robust than in 2008, and that governments should be wary of overreacting to financial innovations, there were reasons to be concerned about traders using digital currencies that could be worthless overnight. Well, again, we know that there are companies that go on the stock market that are worthless. And there's no true real regulation. And when there is a crash, a financial crash or a financial crisis, the Federal Reserve and the Treasury always bail out the corporations that were playing the casino. So Wall Street itself is a casino. We know that. We saw what happened in 2008 with the bailouts that reached that when the final numbers, when the research was done by alternative accounting, we realized that the numbers were at $29 trillion. So they basically, if you ask me, bailed out the banking system with $29 trillion. And it was probably more, but the calculations by those investigating found $29 trillion were actually given out to the banking elite. So I see they're trying to transfer blame for the next upcoming crash to the crypto markets. It's obvious. So the speculation in subprime mortgages in the US was driven by low-income households using mortgages with ultra-low interest rate. Well, the problem with the subprime markets was that they were selling contracts without any collateral. So it was the derivatives market that destroyed or that caused the collapse in 2008, 2009. So it was, the likes of Bank of America, Citigroup, and others that were selling contracts, mortgage contracts, over and over and over again. And then they were giving out loans like balloons. They were giving out second and third mortgages to people that shouldn't have never gotten. People that were getting into speculating, investing, flipping homes. So that was another issue. They're trying to say it was for the low income folks. But the reality is that most low income communities were not getting simple interest loans. They were getting loans with balloons, or they were getting, mortgage loans with paying the interest up front, which was not a simple interest loan. And they were getting mortgages with non-fixed rates, so variable rates. That was the big issue. But they don't want to talk about those type of products. We shouldn't have balloon products for mortgages. That should be illegal, especially in some prime. And they weren't getting low interest rates. So speculation in the subprime mortgages in the U.S. was driven by the low-income household using mortgages with ultra-low interest rates. Cunliffe said there was evidence that speculators were beginning to borrow money to buy crypto assets, heightening the risk of a crash infecting the broader financial system. So again, here we go. They're trying to cover for the crash that's coming for the broader financial system. They're going to try and pin this on cryptocurrencies. At the moment, surveys suggest that the spending on cryptocurrencies was backed with only about 40 billion of borrowed funds. But there was evidence traders were increasingly speculating on the future value of digital currencies. He said traders on the Chicago Mercantile Exchange were handling $2 billion of crypto purchases a day, and the popularity of futures trading was attracting hedge funds and other speculators. The bulk of these assets have no intrinsic value and are vulnerable to major price corrections. The crypto world is beginning to connect to the traditional financial system, and we are seeing the emergence of leveraged players. And crucially, this is happening in largely unregulated space, Cunliffe said. Financial stability risks currently are relatively limited, but they could grow very rapidly if, as I expect, this area continues to develop and expand at pace. How large those risks could grow will depend in no small part on the nature and on the speed of the response by regulatory and supervisor authorities, he added. There was also a growing conflict between the need to develop standards in a painstaking, careful process and the rapid growth of digital trading. Cunliffe said guidance drafted by the bodies that regulate global financial markets had taken 2 years to write, during which time trading platforms for digital currencies had expanded 16-fold. So again, I believe that what they're trying to do is they're trying to pin the next upcoming crash, which should have happened in 2019, the beginning of 2020. They're trying to pin that crash that was coming to the crypto markets to cover up for what they were doing. And now that we've spent the last year and a half with the so-called event pandemic, all the money that was taken out of the system, meaning the transfer of wealth, that happened just in 2020 and the beginning of this year, they're trying to cover up. This is just my opinion. They're trying to cover up for the fleecing of the United States taxpayer dollars. Again, we should have had a crash in 2019. It was coming. People were warning about it in 2018. Then we had the surprise pandemic. All of a sudden, people were, it's order out of chaos. Chaos was created. Everybody was confused. Everything is, going haywire. The economy went down. So it was, again, covering up for what was already happening in 2019. Make sure you like, subscribe, share, hit all notification for live streams and videos. Let me know what you think about what the Bank of England is stating in this article. And just before I go, I just wanted to show you the news reports on what was being said. So you have the Guardian a week ago. Bitcoin could trigger financial meltdown, warns Bank of England. Then you have CNBC reporting on crypto could cause a 2008 level meltdown. And then Barron's is talking about the same thing. And you see how they're targeting Bitcoin. Bitcoin is a concern. They're trying to get cryptocurrencies or Bitcoin under their control as much as they can. That's what they're trying to do. Digital currencies pose a threat to the economy. So again, they're trying to blame cryptocurrencies for the issues that are coming. If you want to support monetarily, you can support me at Bitcoin in the link below, PayPal, Cash App, and head on over to swanbitcoin.com/political avenger. Sign up. Stay safe, and I'll be back with more news after dark. Talk to you soon.